Good morning. Welcome to the Mortgage Rate Forecast with Scott Criss, your mortgage rates and news. It's May 19th. Here's the charts. As you can see, we had a pretty major sell-off day before yesterday. If you look back at my last video, we were kind of noting, hey, we got to be really cautious right now. We were in a flat trading channel at about $102.50, and we broke through that. We broke through that Tuesday afternoon. So. And that's what really developed this downward trading channel. So luckily for all my clients, we were able to get you locked in. That's awesome. I'm so happy for everybody. So it's just been a roller coaster since. FOMC came out, and man, look at this drop today, yesterday. We opened up here and we traded as low as here, and then we finally closed down here. So we, anyway, we opened about the same as our close yesterday, and we're actually doing a little bit better today. So here's the stats. We're trading at $102.22 this morning. Our floor of support is at about 102.20 that you can see here. We poked up our head above that, but our next support level is down at about $101.90, and you can see that's where we troughed last time when we were in a downward trading channel. We have resistance above us at about $102.55, and maybe even sooner than that, we could be pushing up against the top of this trading channel. So be really careful right now. We do have this trading channel kind of pushing up, pushing us down. Here's the reports. Initial claims really didn't have a big impact. The Philly Fed came out, second bad manufacturing number in a row. Not really good for the economy, but definitely good for bonds. The leading indicators obviously didn't help us though. Despite that, we're still trading okay today. Like I mentioned, the news yesterday was the Fed minutes. That's what really punched us in the gut. And because they were coming out and talking about a potential rate hike, obviously. So in June, that is. Okay, so unemployment numbers actually looked really good for the economy, which obviously doesn't help bonds. And so, but the interesting thing is Freddie even came out and forecast for lower interest rates in the long term later on this year. So on top of that, we got Greece, we got China. Their DTI is like really poor right now. I mean, we could see some major turmoil in China. So that's a big deal, guys. I mean, the trading of stocks and bonds, mortgage-backed securities in this case, it's all international. It's all a mixed bag. And so when China or Greece or anybody has a bad day economically, it really does impact our local economy. So anyway, to kind of quantify where we're at, Freddie came out, reported that the average rate last month was 3.61 at 0.6 points. If we're currently trading at $102.22, that's 18 cents worse, which means we're going to pay more than that. We're going to pay closer to maybe a 3/4 of a point for that same rate. So here's your forecast, guys. Mixed bag. It's a mixed bag, right? And the analysts are looking at, and they're mixed up too. Right now, some of the analysts are bearish on the short term. Some of them are neutral on the short term. Some of them are neutral on the long term, and other ones are bullish on the long term. Even Freddie was bullish on the long term. So how do we make heads or tails of this? Really tough to say, guys, but here's what I'm going to be calling for. I'm calling for a roller coaster trading between now and the following week. I think we're going to still maintain trading at about $102 to $102.40. On the long term, I'm going to be going with the Fed. Going with Freddie. I think after the FOMC comes out in June, I think that we are going to see some lower rates later on, but I think it's going to be a few weeks before we see that. It's going to be a roller coaster in the meantime. So that's my forecast. What's your forecast? We'd love to hear from you. Leave your comments down below. And if it's your first time on the channel, you can hit subscribe. I do my updates every Tuesday and Thursday, so keep you posted on what's happening with interest rates and mortgages. And if you're listening to this and nothing made sense, it's okay. At the top right, there's a link for Mortgage Bonds 101. Teaches you the fundamentals of how mortgage bonds impact you as a consumer potentially getting a mortgage. So anyway, that's it for now. Be sure to like the video before you go. Everything likes to be liked, and so does this video. Anyway, we'll see you guys next week. Have a great weekend. Bye-bye.